Boy, that time flies when you're having fun. Back in the action here with you guys once again. It's about that time of day again. Time to get back to work. We got a lot to cover here tonight on this video. It's Thursday evening. It is October the 17th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time today, don't forget I help traders find high-quality setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is to help you guys identify the best levels of support and resistance, the best entry and exit points, and most importantly, the most important traps to avoid in tomorrow's trading session. And we have a lot to cover in tonight's video. Well, first of all, grab that calendar for tomorrow. Tomorrow's the third Friday of the month. Got a lot of big Fed speakers tomorrow. We'll talk about how that impacts us for tomorrow's trading session. And then, of course, we'll look at the charts. We get some crude, some S&P, some Nasdaq, and we'll wrap up tonight on that mighty yellow metal, those gold futures. I'm going to jump into oil. Oil finished up today with a rocket ship going higher here. It looks like those buyers are breaking free of that trading range, and I've got 4 different scenarios I'm watching on oil. Let's grab some charts, and let's get this newsletter out of the station here tonight. Now, as we look at the oil here this morning, what do we know about oil? We know that oil for the past few days here has had that bear bias into this trading range. And really this week has been pretty similar, right? Buy low, sell high, buy low, sell high. And of course, we're coming off of back-to-back nested failures off of that low. But now we got this big old breakout, right? What do we call that? We call that a spike. Now, what's a spike? Spikes are, well, first of all, spikes are strong moves in one direction that never pull back to the moving average, right? In this example, this spike is most likely a short covering rally, right? All the sellers who are holding from back here earlier on in the month, right, they're now getting out here on some fresh news, which we'll talk about in a moment. So bottom line is we know we have that spike, and that spike, anytime I see a spike up at the top of that range, there are really 4 different scenarios that I need to be ready for, right? 3 of them have me going up to that big round number at 55, right? That's on our radar here right now for the buyers. But one of them has me going right back down into that trading range. So how do we buy it? How do we sell it? How do you know where to be looking for the right entries and where to avoid some easy traps, some easy losses tomorrow? We're going to break that down, the buy side, the sell side, and we'll break this into a small bite-sized piece tonight on the video. Over on the S&P here tonight, S&P, boy, they're hoping they can get a nice big spike like oil. What do we know right now on the S&P? We know the S&P went up, it went down, and now it's kind of mellowed out here right in the middle. Now, you can draw some trend lines off the highs, trend lines off the lows. What do we have here, guys? We got a range. Range-bound markets tell us what? Buy low, sell high, and avoid the middle. So I'm looking for a chance here now on this S&P to buy low, sell high. At the same time, I'm watching for those 1, 2, 3 breakouts to know if we can trust the breakout going higher or going lower. Remember, most breakouts will fail, so fade those breakouts. And I'm going to talk about my favorite patterns here tomorrow to buy low, and of course the patterns we'll use to sell high. They are different patterns because the overall momentum of this market is very bullish right now. So range-bound market with a bull bias, we'll talk about buying low, selling high, when to sit on hands, and when to look for a reliable breakout. Let's jump into the Nasdaq here. Nasdaq is very similar to the S&P, a little more dramatic, right? The Nasdaq was today. Big strong move up, chop, 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 right? And big strong move back down. They then finish up that session, though, you'll notice, pretty much smack right in the middle of today's trading range. Looks to me like we got some trend lines coming up. We got some trend lines coming down here. Looks to me like we found a nice, warm, comfortable place here for this market to trade right now. It's a range-bound market. Anytime we see a range-bound market, I want to buy low. I want to sell high. And of course, I want to avoid that middle. Now, we got overall bullish momentum right now in the Nasdaq, so buying low will be our bread and butter here tomorrow. As we go higher, though, how do we sell off that high? It's a very different pattern than trying to buy off that low. And then what would it take for me to buy on the way up to that 8,000 big round number? They missed it by a few points earlier today. what do I need to see up here? What patterns do I need? There are two patterns I'm looking for here on this Nasdaq to qualify the breakout and trade the breakout. We're going to break that down into all kinds of details for you tonight on the video. So if you're an NQ trader like we are in our trade room, make sure you stay tuned for more. And then, of course, over on the gold got all the way back to its measured move. We've been talking about this here all week on gold. We had a feeling that gold, that yellow metal, would find its way home to that 1,500 big round number. So gold is definitely bullish right now. We're seeing those higher highs, those higher lows. And really right now, the most important thing is I don't want to trade inside this range, right? We've had this big old range here ever since last week. And so we knew that range was going to be a magnet. It's pretty much been on our radar all week this week. And I just kind of want to point out here with this bullish bias, I want to be a buyer. With us being in a range again, I want to buy underneath the range, and I really like this area down here because there's a combination of really three things down here. You get the range expansions, you've got the bottom of this wider channel, but there's also this little tiny spike in channel here as well, which really puts us in a great spot here to be a buyer. So I really like this area. I really like that 1488 to 1490 area. So we'll talk about a couple patterns we can look for to be a buyer off of this low. I'll also talk about kind of how to sit on hands in the middle. And then how do we qualify a breakout? You know, can I sell it? I can definitely sell it. I gotta have the right pattern for it. What about a breakout, right? What do we need for this market to confirm a breakout? And then where would it be trying to go? I'll give you a hint. It's just up there, just above us here, around that 11.7 area. We're going to talk about getting in, getting out, fading breakouts, qualifying and trading breakouts. We're going to talk all the details in this video tonight. We got the gold ready to go. I got the Nasdaq, the S&P. The oil is locked and loaded as well. But guys, before we jump into the video tonight, as always, I want to encourage you to make sure you join our mailing list. You may not be aware of this, but just before I publish this video on our YouTube channel every evening, I fire off an email to everybody on our mailing list. And I want to make sure you get that email. That way you always know when our newsletter goes live. And of course, to join the mailing list, it's very, very easy. All I need is your first name, your email, right? Hit that subscribe now button. Oh, and don't forget, when you subscribe to join the mailing list, your job isn't over yet. You still need to go in and check your email inbox because I'm going to send you a welcome email. And that welcome email has a very important verification link in there. I need you to click that verification link, verify I get the right email address, and then I'll start sending you an email every evening when this nightly newsletter goes live. And heads up, guys, sometimes that welcome email, sometimes it gets lost in the spam filter. So if you don't see the welcome email in your inbox, check your spam, right? Make sure you've got the right email address you gave us. And if you have any problems, holler at me here in the office here in Los Angeles. Also, how about some questions here? Any questions? Boy, you guys always have such great questions. One of the things I love about getting feedback and getting questions from you guys is because you always have questions that I hadn't anticipated. So I really value you posting your questions in the comment section below. How can I help? Right? I'm going to do my best to give you as much information as I can here tonight. But what did I leave out, right? Drop me some comments in the comment section below. What can I clarify? What can I reinforce? What terminology didn't you understand, right? So drop those questions in the comment section below. I definitely want to be there to help you guys out along the way. And then also, don't forget, how about some feedback? You know, I really appreciate it when you take the time out of your day to tell me what you love and what you hate. You know, believe it or not, I can't read minds. I know I probably used to be able to when I was younger, but I've lost that skill in my old age, my tongue firmly in cheek, right? But bottom line is, all kidding aside, I want to hear your feedback. I want to know what I'm doing right. I want to know what I'm doing wrong. If you guys want this to keep getting better every week, right? Tell me what you love. Tell me what you hate. How can I make it better? If you were in charge over here, what would you do more of? What would you do less of? I want to hear from you down in that that comment section below. And one more thing down there, when you're down in the comment section below, guys, if you tune in every evening and watch this video, hit that thumbs up on the YouTube channel here for me. Believe it or not, every time you hit that thumbs up button, YouTube helps to expose this video to other traders who would love to learn a high quality strategy like this one. So guys, do me a big favor, hit that thumbs up button. If you tune in every evening and you love this nightly newsletter, if it helps you every evening, help me out real quick. Hit that thumbs up and help me get this video out to more people out there in YouTube land. And then don't forget, guys, if you ever have any questions that are too much for the comment section, or maybe you just want to call me, hear my voice, talk about what you're going through, don't be afraid to pick up that toll-free phone number. Call that toll-free phone number anytime you got any questions. Maybe you've got questions about the best brokers or charting software, or maybe you want to write, maybe you have questions about the free trading course or our free pass to attend our trade room. Whatever the question might be, call us toll-free in the upper right-hand corner or use that live support tool, right? And we're always here standing by to answer all your questions. In the meantime, though, we get some work to do here tonight, don't we? It is always great to have you here with me. So let's not waste any time. Let's get this party rolling here. Tomorrow, of course, is Friday. It's October the 18th. It is the third Friday of the month. 1, 2, and 3. So we are going into what is known as triple witching here tomorrow, third Friday of the month. Probably won't have too much of an impact on us, right? But we do want to be aware Friday mornings do tend to be a little bit lower volume combined with on Fridays, traders seem to be more risk tolerant on a Friday. It's tough to tell why exactly. You know, there are traders out there who dig themselves into a hole Monday, Tuesday, Wednesday, Thursday, and they try a Hail Mary to get out of the red on Friday. You've also got traders who are up on the week and they get all loosey-goosey with those trading rules. So we typically see that kind of cocktail on Friday of lower volume overall, right, because it's a Friday, and that increased tolerance for risk, which oftentimes results in a lot more volatile price action as the day progresses. So what you want to keep in mind for tomorrow is early in, early out. If you want the most reliable patterns, I'm a technical trader, right? I don't trade news. I don't trade fundamentals. Okay, I'll talk about them here and there, but my trading strategy personally, and there's no right or wrong answer to this, but my personal trading strategy when we teach and trade together every morning, right, in our trade room is all based on technical analysis, because that's the horse that pulls the cart. Right? Don't let the news media fool you into think the fundamentals move things around. It's the technicals that set everything up. And so because of that, I'm a technical trader. I focus on patterns, right? I'm not going to worry about the fundamentals. Now the one thing about technicals though is that as you get later on a Friday, you've got fewer people trading, and the people who are trading, they're much more aggressive, right? Because they're either desperate or they're playing with, quote unquote, house money. So the moral of the story is, the point I'm trying to make here right now is, as you get later tomorrow, after 11 o'clock Eastern time, you really got to have a good reason to be trading, because the technical patterns that we use in our trade room, they're going to break down. They're not going to work as well as you get after 10:45, 11 o'clock on a Friday. Now, knowing that, right? Knowing that tomorrow, early in, early out, just keep your head on, be wise about it. If it's going crazy or if it's barely moving, stay away from it. I'll be there with you guys tomorrow in the trade room. And then speaking of tomorrow morning, what do we have here as far as news goes? Well, as you can see, there's no major news tomorrow, but we have a blitz of Fed speakers, right? 9 o'clock, 10 o'clock, 10:30, 11:30, right? And of course, Kaplan later on in the day. So we have quite a few Fed speakers here tomorrow. I'm sure there'll be some sound bites that will ripple through the markets. We'll, of course, have our eyes and ears open. Now, I know I said earlier I don't trade the news. I don't trade fundamentals. I don't. But when we see, if for example, Esther George said something surprising tomorrow in the markets to respond, that will result in a spike, either up or down, and we'll trade that technical pattern right along with it. So could I tell you what they're going to say, how they'll say? I don't care. It doesn't matter. All I know is the chart will tell us, based on the response to whatever they do say. But 9 o'clock, 10 o'clock, 10:30 tomorrow morning, absolutely. All hands on deck. Earlier the better. Wait for those setups. And of course, we'll do it together tomorrow morning like we do every morning in our trade room. 8 o'clock Eastern time, right? We'll prep our charts again, go over all the rules, and then we'll jump in and go to battle together tomorrow morning at 8 o'clock Eastern time. Speaking of 8 o'clock tomorrow morning, right? Let's get some charts ready here for tomorrow's trading session. Jumping in here, I got the oil, got some S&P, got some Nasdaq, and of course some gold on the charts here for tonight. Let's grab that crude oil first. Oil, as you may recall, is right around rollover right now. I warned you guys about this earlier on in the week. It was probably going to be on Friday, and you can see that's exactly what it's looking like here for tomorrow. Now, I'm going to warn you about this. We may see tomorrow, we may come out tomorrow, and we may see like, 1119, may have like, 350,000, right? 1219 may have, 365, right? So it might be very, very close. And so we may see these markets, what I call sharing volume tomorrow, which means you could probably trade either or. But once we see that 1219 contract, once that 1219 contract has more volume, total volume, than the 1119, that's your cue. Switch over now to the 1219 contract. Now tonight, my job's a little difficult tonight because, we might roll over tomorrow morning. We may not. For all I know, we'll still be on the 1119 contract tomorrow. So this is the 1119 on the oil right now. Just be aware though, if you come in tomorrow morning, 7 o'clock Eastern time, doing your prep work before the opening bell, well, look at the volume. If the volume's higher on the 1219, just prep that chart instead. Trade that chart instead. Okay, bottom line is, if you make a mistake tomorrow, we're not talking about contract expiration, okay? We're talking about rollover. Rollover is our decision. Expiration is basically the CFTC's decision, right? Or the CME Group's decision. Okay, so we have to observe expiration. This is not expiration. Expiration happens later on in the month of October. This is just rollover. This is just, volume rolling over. Okay, so don't be aware of that. Be aware if you make a mistake, it's not the end of the world. And of course, I'll be there with you tomorrow morning to make sure it's done properly. What do we know right now? We know the market turned bearish. Right? We know the market was bearish at the beginning of the week. We know the market, for the most part, has been rotating back and forth here, right? We've been focused on buying off the lows, selling off the highs, right? And really, everything was going pretty much as planned, right? We saw that beautiful nested. We talked about these this week a lot, right? A nested failure there, a nested failure here. I mean, we really talked a lot about these nesteds. It just seems it was just interesting this week here how oil gave us two back-to-back, almost identical patterns there Wednesday and Thursday. But I'll tell you, something happened. Right, and I couldn't tell you what exactly did it. There was a so-called ceasefire in Syria, which I'm not sure why the market would respond this way, but there have been some headlines here in the last couple hours. But I'll tell you, boy, as of 1 o'clock here this afternoon, 12:30, this market just shot higher with this strong spike up. Now, spikes always tell me to look for one of three scenarios, right? Spikes tell me to look for one of three scenarios. But because we're at the top of a range, I have to at least consider a fourth scenario, which is a move back down into that trading range. So let's talk about, first of all, how would you sell this market? Okay, because after all, we're top of the range, right? In a range-bound market, what do? We buy low, we sell high, we avoid the middle. If you tuned in this week in the newsletter, you know that's been the story here for crude oil. Now, the hard part is that we have all of this bullishness. So I know I want to be a seller back into that range. Well, let's put it this way. I personally think this market is too strong right now to be a seller. However, I will be gladly convinced otherwise with the right pattern. And the only real pattern you can sell off of a strong spike like this is a crown reversal. Okay, and it looks almost identical we saw back here, right? So now imagine we've got a spike up. I want to see a pullback to the moving average. Okay, now that pullback to the moving average will not be able to retest the major high. Okay, we'll go lower and you'll see buyers try again. Little trap down there, right? Try again. that little trap low, that now is the buyers trying twice. And we then look for at least a double top, ideally a trap high. We call this a crown reversal. Now you can see an example of these back here, right? This is a strong move down. The bears tried once, the bears tried twice, and they bought it back up. It's the same exact pattern that we've seen literally two carbon copies. We're looking for almost identical pattern at the highs here to sell it back down. Okay, the reason why you want to be a little bit extra cautious on this sell is because of the strong move. Anytime you see a real strong move like this in one direction, you got to be thinking there's a good chance they're going to get a continuation leg. All right, so you got to be careful being a seller on this. That's why I'm going to wait to see if I can get the 1, the 2, the trap, and the go. Now, I just want you to kind of see how I draw this. Okay, the way it pulls back, it bounces off the moving average, traps low, the buyers try to come in, and we're waiting there to dump it right back down into that trading range. Okay, now there are three more patterns though that are going to look somewhat similar to this, right? But they're not going to be as they're not going to be the same pattern. You'll see what I mean, right? Usually when a market, let me zoom in a little bit closer on this. Usually when a market runs up like this, you're usually going to see a shallow pullback. Let's get this off of here real quickly here, right? Usually what you're going to see is you're going to see a strong move up like this, you're going to shallow pullback and a higher high. Once you have that higher high, now you've got the first scenario here for a spike in channel. Once I see that higher high, I'm going to mark up that trend line, bring that trend line down now, create my channel. Okay? Now you can usually get in off that first pullback, but after you get that first pullback, then you want to wait for the pullback back to the base of that channel. So there are really two spots here you want to think of for a buy here on crude. This first scenario, this is the spike in channel scenario, you need to have that higher high. Okay, that higher high is going to tell you you can now rely on buying that shallow pullback at the low of that channel. Okay, now once you get that first pullback, now you want to wait for that deeper pullback. That deeper pullback, that's the pro pullback. That's what everyone's waiting on because it'll feel like it's a reversal. And more specifically, as we get that pullback, we oftentimes pull back so strong that it's going to fool the sellers into thinking we're going back into that range. You know what I mean? That pullback is oftentimes strong enough so you can now get those sellers to try to sell off the moving average and you can buy right into their failure. So think about a pullback pattern off the low of that channel, but then again, later in the process, a seller failure pattern as it slips below the moving average. Okay, now everything right now assumes those buyers are trying to go back up to retest these highs at 54.93. We'll call it 55. If they get to 93, they're going to get to 55. 55 is a very tasty big round number, right? 55. It's half of between 50 and 60. It's an easy round number to become a very sticky area. Okay, that is the first buy pattern. Now the next buy pattern is going to be as we go up, we start seeing the market go sideways up here. Okay, this may happen tomorrow, especially since tomorrow's a Friday, right? We start seeing the market go sideways up here. Now this will, of course, will have double tops, double bottoms, and once you start seeing that sideways movement now, right? Moving average flattens out, now you know it's a range. Once you know the size of your range, you can take the size of that range, project it down, and create key support down here. Okay, so I don't know enough about it yet, unfortunately, but I do know, though, if we do go sideways here, I'm going to mark up that range, copy and paste it down, and find my support level. Once I've got my support level, now look for a failure pattern for the bears. Wait for the pullback. That moving average will come over. The sellers will oftentimes sort of sell off that moving average, again, thinking we're going back into that range now, but it's not a bear market. It's a bull market at that point. We're now looking for that failure to buy back up into that trading range. First target, back to the high, runner, all the way up to that big round number. Okay, that's scenario number 2. Then scenario number 3, the third one, and probably the most difficult here is going to be a strong move up and then a lazy pullback. And I say lazy very slowly because that's exactly what it's going to feel like. Okay, and you'll notice because it's gonna have lower highs and lower lows. These are called flag patterns. Now the key to a flag is the rule of three. 1, 2, 3. In my experience, most flags will go 3, maybe 4 pullbacks before we go up. Sellers will think it's a bear market because of the bear channel. It's not a bear market though. Momentum is all bullish. It's just pulling back to attract more buyers. What happens is sellers will come in and try to sell above that high. Let them try to sell above that high, and then literally you know where their stops are now, right? Now their stops are right above that high, and we're literally buying right into those stops. So the bottom line is, on a flag pattern, just remember, it's going to drive, it drives me nuts usually, but maybe not you. Maybe you're more patient than I am, right? But usually these flag patterns, they're like, what the, why is it so slow? You get this big blast higher, and then all of a sudden it goes slowly, 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 slowly. And what happens is rookie traders, I know this because I made this mistake a lot when I was a rookie, they start to assume, well, I guess this is bearish now. We might be going back into that low. And that's exactly what you're hoping for. You're hoping that we get sellers that try to sell that break and retest. Okay? Usually what happens is it's a trap up here, right? A little trap high, back down. And once you've got those bears coming in above that trap high, now you know where their pain is, right? Now you know where they're, right where they start waving the white flag. Get me out, get me out, get me out. And you're buying into that stop. Again, all targets up overhead, right? All targets up overhead. All right, guys? One last scenario is that hidden channel, right? I've got that 1, 2, 3, 1, 2, 3 breakout, 1, 2, 3 reversal. Mark up that high, mark up that low, look to buy that pullback. I really like this area. I just don't know if we're going to get that pullback or not. The way this market looks right now, we might find ourselves really running higher here, and we've got to wait for one of those 3 patterns here. But let's say, for example, though, we do get that pullback. And this is where a lot of folks get confused as far as whether or not, is it a pullback or is it a reversal? So what you want to do on a pullback here is you want to get underneath that moving average, right? Get underneath it. Then get those sellers to try to sell off the moving average. And again, they're just trying to go back into that range. But remember, anytime you see this much strength in one direction, it's almost a guarantee we retest that high, even if it's a range, right? Even though this is a range, this move higher is so strong. And obviously, we're trying to get that retest. What I want to do is I want to get below that moving average. Get those sellers to take the bait. Then you've got them right where you want them. Now you know where their pain is. And now we can look for, right, that failure pattern into pullback pattern combination. Failure into pullback combination. Does that make sense? All right. Now look at the difference between this failure setup and that crown reversal. Okay, the crown reversal, sorry, wrong button there. The crown reversal, what it will do is it'll pull back to the moving average. The buyers will try. It'll be a trap low, up, and then go. It looks similar, but it's really quite different, right? It really is. It's quite different, right? The buyers are aggressive, almost to a fault on this crown reversal, whereas on a failure, we're pulling back nice and deep. The sellers are actually fueling that move higher. Does that make sense, right? It's a very specific setup. We get below the moving average, the bears try to sell it, and we're waiting to pop it right back into their stops, right? Buy into those stops here. All right, guys? So, boy, I've given you guys quite a few different options to look for tomorrow. If we do end up back inside that range again tomorrow, don't forget, if we end up back in that range, buy low, sell high, right? As we go lower, same patterns back here, right? It's that 1, that 2, that trap back up. I mean, heck, we've had some great success on that so far this week in the newsletter, right? Might as well keep looking for them tomorrow as well. So keep that in mind. If we do end up back at those lows, right, we'll keep rinse and repeating at those lows as well. Now, I want to keep going. I've got the S&P to cover next, but I want to make sure I give you a much deeper dive into everything we've talked about tonight. And to do that, I'm going to give you a link up here in the upper right-hand corner for our free trading course. Everybody loves this free course. I really enjoyed making it for you guys and sharing my knowledge about these markets. That free course, though, will teach you my 3-step strategy, the same strategy we use in our trade room. It'll teach you my 4 favorite entry patterns, but most importantly, it'll show you hundreds of examples of how we apply this strategy to our favorite futures markets. So grab that link in the upper right-hand corner. If you're on the blog right now, there's also a big red button right below the video tonight on the blog at sidewaysmarkets.com, but grab the link in the upper right-hand corner there on YouTube. If you're on YouTube, everything is located up in the description of that YouTube video. So definitely check out the description for all the important links. In the meantime, though, let's keep this party rolling here. Over now to the S&P. The S&P, as you can see here, well, first of all, let's be very, very clear on this. The S&P overall is very bullish right now. It's very difficult to confidently sell this market because you can easily see that big strong run up. We're making new highs. We may not be jamming through the highs right now, but it's very, very obvious that buyers are waiting down here to buy it and kind of scoop up those bargain deals as it pulls back. I can mark up these highs, I can mark up these lows, and it's very easy to see here that some real ideal locations here are down around that 29.90 area right here on the S&P 500. So we can see kind of a bigger spike in channel, okay? So we know we've got that bullishness on our side right now. The most important thing at this point, though, is it looks like with this overall bull market, it looks like we got that big round number really on our radar, right? 3,000. We talked about this last week. We talked about it at the beginning of this week. This 3,000 big round number has really been a big magnet lately. And you really could say we've rotated from the 3,000 to 2,900, back and forth to 3,000 we go. So for right now, as we go into a Friday session tomorrow, we are, well, what appears to be pretty comfortable around this big round number. The big thing is we go up, we go down, and where did we end today? Right in the middle. Now, what does that tell you? Bullish? Bearish? Nah, neutral, right? This market looks comfortable, right? Like a pair of wool socks and a blanket, right? Looks warm and comfortable right around that 3,000, which means if we know the market's balanced, that means what goes down will likely probably come right back up. We also know what goes up will probably eventually come back down. There's always open right for those Fed speakers tomorrow, obviously. But we know right now, though, that we're balanced and we want to buy low, want to sell high. Now, again, there's that definite bullish overall bias to it, so I can be relatively aggressive being a buyer underneath. I've got to be a little bit more patient to be a seller overhead. That also means, too, I can be a lot more aggressive on breakouts as we go higher than I could be a breakout going lower. So let's talk about the buy side first. How do we buy this market? Really, at this point, you're buying either a pullback below the range or you're buying a breakout above that range. And really, there's one easy way to do this. I've got my trading range here. I use that range to find my buy zones and my sell zones. I want to buy low, sell high, avoid the middle. That's pretty simple, right? That's pretty easy to understand there. Okay, so we know we got the buys below, sells above. Now, just like we talked about on oil, whenever we have a range, I want to fade the breakouts, right? What that means is I like to look for a nice breakout going lower. Once I see that breakout, then I simply wait for the pullback to the moving average. When the market pulls back to the moving average, now you're going to start to see the rookie sellers who don't know what a range-bound market is yet. And I know this because I was like that, right? The first year of my career, I had no idea that ranges were balanced. I thought every market was a pullback market, right? That's what a lot of rookies do. We don't really learn the two different types of markets for early in our career. Okay, by the way, in my free course, I talk about identifying ranges and trends and why they're so important. But I can easily assume tomorrow, though, if we see a nice strong breakdown here, we're going to probably get some rookie traders that think everything's a pullback, right? And they think, okay, I'm going to sell the pullback to the moving average. And once you see those bears come in at the moving average there, now you know right where their pain is. Now you know right where those stops are, and now we can look for that combination setup, that failure into pullback combination. It's that failure pattern, right? It's that failure pattern into pullback pattern, and then up we go. I would put that big round number, right? Main target, and then runner back up to retest that high. Okay, again, it's called a failure pattern, a seller failure into a buyer pullback. Now, let's say for some strange reason, the market really gets crushed, right? Something opens up in Asia, market gets slammed, right? Gets hammered lower here. It hasn't broken free yet because what do we need for a breakout? A strong move down, a pullback to the moving average, and a jump off the moving average. What do we call that? We call that a 1, 2, 3 breakout. Once we see a 1, 2, 3 breakout, what do? We mark that low. We mark that low, find that hidden channel, and we're selling off of that hidden channel. Okay, notice how this pattern looks. It's a 1, strong move down, 2, pull back to the moving average. We're not selling that pullback. We're waiting for the follow through. Then we can sell the next pullback. Okay, it's a lot like that bullish spike in channel we talked about on the oil. Okay, so that's what a breakout will look like to the downside. What I'm talking about is what if it just tumbles? Okay, no pullback, no jump off the moving average, tumbles lower. Then can I still buy this thing? You can, but you want to use that same pattern I talked about earlier on oil: 1 try, 2 try, and back back up in from there. Right? So this is called a nested failure. It's just a small, subtle difference, right? If it's a shallow pullback, I'll use that failure, just a straight seller failure, and we can buy into it. But if it gets whacked, right, and really runs lower, and I still, right, no breakout in sight yet, I've got that 1, I've got that 2, and then buying it back up into that trading range. We call these nested failures. And again, a lot of it has to do with how the market pulls back, the momentum of the market as it pulls back. So those are 2 patterns to look for on the pullback. As we go higher here, how can I be a buyer as the market goes higher now? Can I? I definitely can, because I've got momentum on my side. I've already got the bullish momentum on my side, right? The wind is already at my back. There are 2 patterns to look for right now. One of them is the conservative one. 1, 2, 3 breakout. 1, strong move up. 2, pull back to the moving average. 3, strong jump off the moving average. Remember, in this particular setup, you don't need to be a hero on that first breakout. But that second leg, right, I guess the third leg of this 1, 2, 3 breakout, that third leg, it does need to be something special. It needs to have some oomph. Once you get that 1, 2, 3 breakout, mark the high, draw the trend line, find the channel, and now we're looking to buy off the low of that channel. Does that make sense? Right? So once you get that 1, 2, 3 breakout, mark up, buy that low. Where's my target? Up around that measured move. Okay, now, second one, most aggressive one. This one does rely on a strong spike up. Okay, the hero of this one is that strong spike, right? So strong spike up. Now, anytime we see a strong spike in one direction, we're going to probably see a follow-up leg. But we have that measured move right overhead here now. It's also a level right above us. So to look for is what I call a 2-try breakout pattern. Okay, it's a 1, it's a 2, and a trap below that low. A 1, a 2, and a trap below that low. It looks a lot like this. Strong move up, 1, 2, trap underneath that low. Okay, almost identical pattern that we saw earlier on in today's trading session. So as we run high, remember the key to this one is you got to get that strong move up. Let those bears try once, let those bears try twice, and look at that trap. The trap is necessary because you've got that measured move waiting overhead. Last but not least, don't forget, stay out of the middle. How do we sell above the high? As we go higher here, what direction is momentum? Bullish. So how do I sell in a bull market? I use that nested, right? The 1, the 2, and back down from there. Ideally, you want 2 completely separate tries. Ideally, you want that second try to at least double top. Even better would be a trap high and back down into that trading range. Okay, we call it a nested. With a trap, it's called a crown reversal. Okay, this one would truly be a reversal going against that trend. Now, again, I've covered a lot of this so far, and I'm sure right about now you might be overwhelmed with all the terminology, right? All the settings for all the indicators. So don't forget, everything is detailed, right, in that free trading course linked up in the upper right-hand corner. I'll also put a big red button for you below the video tonight on the trading blog. Let's keep going. S&P is looking good. How about some Nasdaq? Nasdaq is in a very similar situation right now to the S&P. We kind of went up, we went down, and pretty much ended back down or back inside of a range here. We go up, we go down, and I'll tell you, I have my range right here. It might end up being right here tomorrow. It's a little bit tough to tell exactly where that range is, but one thing is for sure, if you were to measure the size of that range here, where are we? We're pretty much right back right in the middle of that trading range. So what went up came down, what went down came right back up. This market looks quite balanced here at this 79.55, 79.50 area on the Nasdaq. What that tells me is, again, much like the S&P, we do have an overall bullish tone to this market right now. Right, we can definitely see that. We know the market is overall bullish. And most importantly, right, buyers are just waiting here to scoop up these bargains right now. Now, again, I mentioned this earlier. We do have some Fed speakers tomorrow, so we may see a nice strong break out of this range. But as of right now, though, all we do know is the moving average is flat. It doesn't look like anybody can hold control right now. The buyers had it. The bears had it. Right? That doesn't look like a very bearish market, though, right now, the way they're holding above that moving average, right? See how those candlesticks can't close below it? Doesn't look very bearish to me. So it looks pretty balanced, and I've got to give the bulls a little bit of the edge just because of the overall momentum in this market. Now, knowing this is a range, it's just like on the Emini S&P. I've got my range. I mark up my buy zone below. I mark up my sell zone below, right above. I want to buy low. I want to sell high. Again, because we're overall bullish, I can trade those breakouts if I get the right breakout signal. Okay, let's talk about those one more time here. Okay, so again, with that range here now, okay, if we do get that run lower, I can look for that seller failure, right? Moving average comes over. Sellers try to sell off the moving average. We're buying into their stop losses, buying the pullback. Unless that pullback, as I always remind you, unless that pullback is inside the range, you don't want to be trading inside of that range, right? That, of course, is the no trade zone. So we'll get those labels out of there for us, right? So again, we get that strong move down, not too strong, right? Breakdown, look for that failure. That failure almost always leads to a pullback, and that pullback, right, finishing off that move back up to retest those highs here. Failure pattern into pullback pattern. And again, as I've mentioned a couple times already this week, you want to make sure you get that pullback pattern below that range. You don't want to be taking that pullback pattern inside of that range because, again, look at how choppy it gets inside that range, right? So stay away from the range, buy low underneath it. Now, what if we really get clobbered? Well, now we got to go nested, right? Now that momentum is too strong. Now we go 1 try for the bears, 2 try for the bears, and then back up from there. Okay, so same idea there on the S&P. As long as we don't get the 1, 2, 3 breakout, I can look for that run back up into that trading range. Just give those bears the benefit of the doubt and buy after they fail. Okay, as we go higher here, how do we buy going higher? 1, 2, 3 breakout. Again, strong move up is not so important on this one. What's most important is that jump off the moving average. Once we get that jump off the moving average, now you know we've broken free, mark the high, mark the low, find the sweet spot, right? And we're buying off of those lows, right? 1, 2, 3 breakout. 1, 2, 3 breakout. Mark the high, mark the low. We're buying that low. Where's my target? Definitely up around that big round number. If we can get into a if we can get into a 1, 2, 3 breakout, right? Take a little portion off at that high, but I would imagine that 8,000 is gonna be what everyone's hunting for as we go higher. Then of course you get the most aggressive one, right? This is the one where you really got to have a strong breakout. Okay, once you get that strong move up, 1 try for the bears, 2 try for the bears. Because we have that high of day up here, I do want to get that trap low. Trap patterns are my go-to patterns for any time I'm concerned about not having enough open space overhead. So again, don't forget, this one does require that strong initial break higher. Okay, the first pullback is usually profit taking for the bulls. The second pullback, and notice how I draw it, it's a higher high. That second pullback now, that's where the sellers are actually getting in taking on risk, right? Getting into a short position, trying to go back down into that trading range. Once they get below that low, nice strong signal candle, we're buying into their stops. That's the fuel of this move going higher. I call it a 2-try breakout pattern. Now, how about a breakout of the downside? Well, same thing, right? So strong move down, pull back to the moving average, and then jump off the moving average. Again, you've got to get that jump. You've got to get that jump off the moving average. Mark that low, mark the high, find that hidden channel, and we're making a run going lower. Where is the target as we go lower here? We got all that big, right, that big cluster down here. I would imagine if this market takes off the downside, tomorrow, Fridays can definitely become big runs because the volume is a little bit lower, right? That 70, that 78, 80 area can easily be an objective here, right, for those bears. But again, don't force it, okay? Don't force the breakouts. Don't trade the breakout pullbacks. The breakout pullbacks oftentimes fail and go right back up into that trading range. And again, I know I sound like a broken record, but if you want to see a lot more examples of these patterns I'm talking about, make sure you grab that free course. It's linked in the upper right-hand corner. It's also in the description of this YouTube video or that big red button below the video tonight on the trading blog. Last but not least here on the yellow metal here tonight, we got some gold. Man, gold looks great right now. Well, I mean, it's not, it's not pretty. It's pretty choppy out there right now, as you can tell. But it's very obvious the market's bullish. It's pretty clear they got their measured move. And, of course, we are, surprise, back inside that range. We've been telling this story all week this week. We saw that big move down. And ever since early this week, right, we saw the 1, the 2, the crown reversal, and that just kind of set everything back up, going back up into that trading range. So the bottom line is we know we're bullish, but we're right back into the range. Range-bound markets tell us to buy low. They tell us to sell high. They also tell us we can use the amount of the move below as the amount of the move above, and that makes for a great runaway target here tomorrow for all those bulls. So the sellers, right? Sellers want to go back down to that 1480 area. Buyers want to get up to that 1511 and change. So how do we do it? We know we're bullish. So how do we buy this market? Again, I get my buy zones below, my sell zones above, and my no trade zone right in the middle. How do we buy this market? Well, first of all, I want to get down in this area. And a lot of this has to do with how far the pullback, right? How far the pullback goes. So if we run lower here, down to the low of this hidden channel I got drawn in here, go down to the low, moving average comes over. I'm looking for that straight failure into pullback combination. These are very, very common, and they're very reliable too. Okay, so when we pull back to that low, failure pattern, pullback combination. Okay, these happens in all shapes and sizes. You can see one back here. We go lower, back to the moving average, tiny red candle. Now, at the time though, bears come in, they fail, up and go. Okay, you can see those patterns pretty much everywhere underneath these ranges. And again, I'm just simply drawing the screen right now. Take that free trading course I linked up in the description, and you'll be able to see lots more examples of these patterns. So it's a seller failure, okay, to buy the low of the range, then a buyer pullback going back up into that trading range. But what if this thing gets clobbered, right? What if we get a big drop down? Then what do we do? If we end up down near these lows down here, okay, now we've got that real strong momentum. And you're probably not going to get the bears to give up as easily as if it was a shallow pullback. So in that situation, let them try once, let them try twice. Again, if you get the trap low, that's even better. All you really need, though, is just to make sure you get that 1 and 2. Okay? Now, why do I say that? Why do I say you don't need a trap low in this one? Because you're going with a trend. Okay? In this example, if you're buying off that low, you don't absolutely need that trap. It's a great add-on. It's a great odds enhancer. But again, because you're going with the momentum of the market, you can be a little more aggressive. Now, if I want to take that same pattern and sell the high, I would need that trap high. It'd be non-negotiable, okay? I would need that trap high overhead because I'm going against the trend. Hopefully that makes sense, okay? So now I've got the shallow pullback. The shallow pullback is that failure into pullback combination, right? Shallow pullback is that failure into pullback combination, or it's that deep pullback. It's that nested failure. 1 try, 2 try, and back up from there. If you get the trap low, even better, right? Even better. Now, as we go higher here, how do we sell it? That crown reversal, right? Yeah, 1, 2. You're with me on this. You're with me on this. See how it kind of all comes together now? The patterns are the same over and over again. It's just how we apply the patterns. Think of each pattern as a tool in your toolbox. Certain jobs need different tools. If you choose the wrong tool for the wrong job, you're not going to get good results. My job as your coach, my job as your leader, my job as, kind of your mentor, so to speak, in this YouTube channel, is to really help you get a grip on what is momentum, because momentum will determine the type of patterns that we use. And then you'll learn a lot of the basic patterns, right, inside of that free trading course. So grab the free course there. I'm simply marking them up here on this video. How about a breakout? Oh yeah, breakout definitely on my radar, because you get that pendulum swing waiting, just begging to be hit tomorrow. Okay, there's a big old bullseye right on that high for tomorrow. Now, don't get me wrong, they've got to get some magic happening here in the short term if they want any chance to get there, because a simple push higher is not going to be enough. What I want that 1, 2, 3 breakout, same thing as before. Mark the high, find the channel, buy the sweet spot. Okay, again, it's called a 1, 2, 3 breakout. 1, 2, 3 breakout into hidden channel pullback, or it's a strong move up, real strong, right? Real strong. This one's got to knock your socks off, right? It's going to blow your hair back a little bit. It's a strong breakout. Got to be strong. Once you get that strength, now it's 1, it's 2, and as long as we can get to this early enough, we won't need a trap on it. But if you waited until way up here to get it, you'd want a trap. Does that make sense? So how do you know whether you want a trap low? How do you know if you need a trap low? If you're right butting up against that, right, that objective, as we call it, you're going to want that trap low, because it's the only way to really get in without buying high. But if we get a strong run up here in 1 and 2, you'll be fine, right? In most situations, you'll be fine up there, because you got plenty of space up there. Nobody's worried about missing that move yet. Okay? So keep it in mind as we try to go higher. And again, if we just kind of jump up here, wait for that pullback to hold, then you've got it. Don't try buying that breakout pullback, because look what happened before, right? Breakout pullbacks fail all the time on range-bound markets. So now we know what a buy side looks like, what a sell side looks like. Don't force the breakouts, especially those counter trend breakouts. Make sure you wait for that 1, 2, 3 reversal. And again, guys, as I said earlier, we do this together every morning, 8 o'clock Eastern time, Monday through Friday. Come out and do it with me tomorrow morning. Trading on your own is not very easy, is it? I made a lot of mistakes, lost a lot of money when I was doing it on my own. So come out tomorrow morning, come join me as a member in our trade room. That way you can do it confidently, do it correctly, protect that capital while you're learning, right? I'm going to lay the whole plan out tomorrow morning, bright and early at 8 o'clock Eastern time. And don't forget, it's easy to register. you can join our advanced membership on our website. But if you're on the YouTube channel right now, I'll put all the links in the description of the YouTube video. If you're on the blog at sidewaysmarkets.com, just scroll right down. There's a big blue button just below the video tonight that will give you a chance to join the trade room. Either go to the description, grab that link, right? Go to the advanced course on the homepage of School of Trade, or scroll down below that video. And don't forget, if you want to call me, I'd be happy to walk you through the entire process. We got live support on the right-hand side. I got a toll-free phone number over on the left-hand side. So don't be a stranger. Don't be afraid to pick up the phone and call me here. Even if it's this weekend, right? I'm always here working for you guys and always looking forward to answering all your calls. If membership is not right for you just yet, that's great. Grab the free trial. The free trial is a great place to start your trading career, or maybe you just haven't quite mastered this stuff yet and you want a much deeper dive into this entire trading strategy. The best part about that free trial is you'll get our free trading classes, our free pass to our trade room, and hundreds of examples of how we apply the strategy on our favorite futures markets. You guys will love it. If you don't, give me some feedback. Let me know I can make it better. Always appreciate you guys joining the mailing list, joining as a client, and of course, give me that thumbs up button tonight on the YouTube video. Guys and gals, no newsletter tomorrow night, right? They actually let me out of my cage every once in a while on Friday afternoon, so no newsletter video tomorrow night. We'll come back next week at a full week ahead of us next week, that 4th week of the month of October. Which reminds me, what am I going to be for Halloween this year? Have you picked out your costume yet? What are you going to be this year? I got a couple ideas. I got to pass them by my wife first, though. Make sure she approves of those costume ideas. All kidding aside, though, if I don't see you guys tomorrow morning, 8 o'clock Eastern Time, I'll see you guys back here next week on the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And we'll see you guys next time. Adios, amigos. Bye-bye for now.